Keep calm. And carry on buying AI tech stocks as they deviate from the highs. Where the greater the deviation, then the greater the buying opportunity presented. Keep calm and carry on buying. Quantum AI tech stocks. UK housing market analysis. This video is part of a series based on my extensive analysis that concludes in a detailed 3-year trend forecast for UK house prices that was first made available to patrons who support my work. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $4 per month. And my UK housing market analysis will soon be followed by my even more extensive analysis of the US housing market that also concludes in a detailed 3-year trend forecast, which is at a time of maximum price uncertainty. Even the Fed does not know from one meeting to the next what they're doing. Barely days before the Fed hike rates by 0.75%, the chairman Jerome Powell was saying that 0.75% hike was off the table, which illustrates the degree of uncertainty out there. And also access to my most recent ongoing analysis geared towards capitalizing on this stock's bear market that I warned to expect last December. Capitalize on by accumulating AI tech stocks at deep deviations from the highs at target buying levels, which again first being made available to patrons who support my work. So do consider becoming a patron by supporting my work for just $4 per month, for gaining access to over 35 years experience, right from before the 1987 crash straight through to this stock's bear market. And in this video I'll be covering the inflation megatrend. Inflation has soared to over a 30-year high, even on the highly manipulated CPI measure, resulting in the biggest fall in living standards since records began for the UK and probably similar for the US and most Western households, who are in a deep real terms drop in disposable income during this year, with the UK set for an eye-watering plunge of over £2,200 per household, which if you remained focused on the mainstream press then you would not have seen any of it coming, having been hoodwinked for the whole of 2021 by the central banking crime syndicate mantra of always transitory inflation, which as I repeatedly warned would turn out to be permanent.
How long does inflation have to run above your target before the Fed decides maybe it's not so transitory?
Well, first of all, the test that we've articulated, I think, clearly has been met now. You're absolutely right. Inflation has run well above 2% for long enough that if you look back a few years, inflation averages 2%. So I think we can say that is it was not the case going into this episode. It had been many years since we had inflation at 2%. So I think the word transitory has different meanings to different people. To many, it carries a sense of short-lived. We tend to use it to mean that it won't leave a permanent mark in the form of higher inflation. I think it's probably a good time to retire that word and try to explain more clearly what we mean.
However, the con merchants are now playing the blame everything on Russia game, as if inflation and all of the West wars were non-existent until Putin delusionally marched his cannon fodder into the Ukraine, having believed his own lies echoed by his yes men, ensuring that victory would come within a few days of invasion, which they soon realised not going to happen. So firstly, understand this: what you hear in the mainstream press is economic propaganda. Not only that, but economics is pseudoscience. Its purpose is to fool and keep the masses sedated, a sleight of hand to present X to be true when the reality is Y. and the underlying reality has remained constant, as I wrote in my Inflation Megatrend book of January 2010, that of an exponential inflation megatrend courtesy of government and central bank rampant money printing, and for the duration since, nothing has changed. Absolutely nothing. The government prints the debt and the central bank then monetizes it and then funnels the interest payments back to the government. And now in the UK, we've even got crazy. We even got maturing bonds that the government pays the Bank of England, that it then sends the cash back to the Treasury. That under any other name is fraud, but that is what we have. So we still have the same perma-deflation clowns with their always imminent deflation, depression, acting to cloud people's judgment into continuously making huge blunders due to the fear of falling prices, which has never been the primary direction of travel. Instead, the stealth inflation theft tax has stolen the value of people's lifetime savings and purchasing power of earnings. There's never going to be deflation. Understand that. Never. So what does one do when faced with rampant, out of control inflation that has fast eroded the purchasing power of earnings and savings? Well, there's only ever been one answer, which is to invest in assets that are leveraged to inflation, such as the quantum AI tech stocks. And then there's bricks and mortar properties, which I'm sure you all have a position in. And then commodities. And I'm not saying this with the benefit of hindsight, but this has been my message right from the last peak of the clown's deflationary depression is coming mantra during the March 2020 panic crash. Instead, as I voiced at the time, rampant central bank money printing implies to expect the exact opposite of the clueless mainstream press, all on the basis of pseudoscience of economic propaganda. You can go and check out my analysis during March 2020 to see for yourselves that I was warning since then. Big inflation is coming. Every video has warned since, and well, it's arrived. So instead of a deflationary depression now, with the benefit of hindsight, some 2 years on, most recognise that rampant central bank money printing has resulted in out of control inflation. Though, what have the clowns been focused on since? You know, when will inflation peak? Well, as I've been stating for well over 6 months now, high inflation is probably going to be with us for the remainder of this decade. Yes, we'll get temporary dips, but even on the fake CPI inflation measure, average inflation is going to stay persistently high, well above 2% in 2 years' time. Mantra garbage that the Bank of England still iterates to this very day. And worse is the fact that real inflation is at least twice CPI, and it could be on nearly triple. In the UK, real inflation has been in the 15% to 20% zone for well over a year in the UK, as I've been voicing in videos since mid 2020 to expect big inflation, which is why most ordinary folks are in a state of shock that their earnings cannot cover the expenses, as they're being hoodwinked by the central banking crime syndicate with their propaganda called economics, used to fool the public into believing an economic reality that just does not exist. So again, all we can do when faced with rampant central bank money printing, QE forever, we'll never go back to zero. All reductions in central bank in QE are temporary, with the last doubling again to double again at the next crisis, i.e. war with China or earlier. Tapering of $90 billion per month. How long do you think that will run for? A year at most, not even that. Take the balance sheet down by 10%? So we have no choice but to invest in good stocks and in the housing market. We've got no choice. This is why we have no choice but to be invested in price volatile assets such as stocks and housing, which, whilst yes, will move up and down in value from time to time like a yo-yo, in response to sentiment, psychology, investor psychology. They go from extreme optimism, euphoria, FOMO, fear of missing out, to extreme pessimism. The end of the world is nigh. The bear market's only halfway done mantra. Extremes it oscillates between. Usually, though, bear markets are short-lived. Nevertheless, over the long run, will be leveraged to rampant government and central bank money printing, inflation. So we have no choice but to be invested in such assets. No choice whatsoever. What's the alternative? Destruction of one's hard-earned wealth, which is why the largest asset class I've held for over a decade now is bricks and mortar UK housing, regardless of what the price indices do from month to month, year to year. Oh, the clowns proclaim about an imminent deflationary crashes. There is no choice but to hold assets that are leveraged to inflation, as the alternative is one will lose the value of all of one's hard-earned earnings, savings, all of it will be gone. Which is why whenever I'm asked if now is a good time to buy a property, I tend to remind those asking that house prices are leveraged to inflation. So regardless of what the tripe in the clueless mainstream press of how UK housing is unaffordable, however, inflation ensures that the overall trend trajectory remains upwards, for the fundamental fact that unlike fiat currency, houses cannot be printed, and thus house prices have confounded the clownonomics in the mainstream press by soaring into the stratosphere. Basically, housing is one asset class not to trade in and out of like one tends to do with stocks, but rather to accumulate whenever one observes deviations from the highs. For the greater the deviation from the high, then the greater the buying opportunity presented. My focus, be it on housing or good stocks, is always to buy the deviations from the highs. Whilst the focus of most would be investors are possibly drawdowns. As if one can buy the exact bottom. You're not going to buy them. Good luck with that. As you will only ever see the bottoms in your rear view mirror. Hence why most investors miss out on the greatest bull markets in history, as they miss the bottom and then wait for the last major low to repeat so they can get a chance to buy and end up buying nothing. Or if they do buy, soon tend to sell on a few percent blip higher on fear that even lower prices are just around the corner, and this is a bear market rally, which is what you hear at the bottom. Every rally off the bottom is a bear market rally. Every. And the bigger the bear market, the longer the mantra shifts for. 2009, that mantra, when the market bottomed in March 2009, as a forecast, and I timed perfectly. Time's a price, if not time. I was out by about 3 months in time, but price, perfect. And for the next 3 years, that rally was seen as a bear market rally. Can you believe that? Who's paying these idiots such as Nouriel Rabouni? The idiots. For 3 years they went on and on. Oh, it's a bear market rally. It's going to resume. The bear market's going to resume within a matter of days, and never did. I don't understand them. It's because they're clueless. So you will only ever see the bottom in the rear view mirror, hence why most investors miss the greatest bull markets in history, which means investing is largely psychological. For some reason, most people are wholly focused on drawdowns, hence why they tend not to buy when prices are cheap and instead FOMO into assets when expensive, which is the exact opposite of what one should do. So keep it simple, folks. Buy the deviations from the highs. Drawdowns are normal. You will never buy the bottom or sell the top. Attempting to do so means you will hold nothing of worth holding, nothing of value. This garbage Cathy Wood turd stocks. High inflation is forecast for the whole of this decade due to rampant money printing. That's my forecast for the whole of this decade. UK CPI inflation hit 6.2%, whilst RPI, which most corporations raised their prices to, has rocketed high to 8.2% at the time of this analysis, whilst real UK inflation stands at least 15%. Meanwhile, across the Atlantic, US CPI inflation of 7.9% stands on the brink of breaking well above 8%, with real inflation also at around 15%. So much for the pandemic deflationary depression that the clueless media had been promoting for much of 2020, and then sleepwalked into the mantra of transitory inflation for the whole of 2021, finally awakening during 2022 to what amounts to out of control inflation. But like gullible fools swallowing central bank sales pitch of laying the blame on Tsar Putin's Afghan War 2.0 in Ukraine, which illustrates the extent to which what you read in the mainstream press tends to be garbage written by clueless journalists. Garbage. Instead, I flagged what was likely to happen, not in 2022, not in 2021, but right back at the beginning of this accelerated phase of the inflation megatrend, mid-March 2020, when the Fed resumed QE forever. And the UK, all the central banks did, went on a debt-fueled spending binge that the central banks dutifully monetized by doubling their balance sheets, printing trillions of fiat currency without abandon, so as to avoid that which most were expecting, the COVID economic black hole. Still, despite rampant money printing, fools persisted with the imminent deflationary collapse mantra and never bought the stocks because they thought they were going to collapse. Instead, the stocks did the exact opposite. So what does one do when faced with rampant money printing? To invest in assets that are leveraged to inflation. That is quantum AI tech stocks, housing, commodities. Big inflation is coming was warning at virtually every video I posted. Which I bought everything I thought I would need to buy in terms of big ticket items for several years, from mid-2020 to around mid-2021. Since which time I've been largely out of the big ticket consumption loop, just as the supply chains closed their death jaws in sending inflation spiraling ever higher. Though, again, supply chain woes are not the primary cause of inflation. Government debt and central bank money printing are the primary cause of inflation. Supply chains is a smoke and mirrors exercise. So whilst the government and the central banks utilize the pseudoscience that is economics to pump out transitory inflation propaganda, you don't get transitory inflation when you print trillions of dollars and then get the central banks to monetize the debt by doubling the balance sheet. It's a big con that most fell for. Look, journalists are good at writing reams of highly polished text, but at the end of the day, they are what they are, journalists, and they don't really have a clue what's going on. Hence the BS. We have high inflation not because of Russia, but because of rampant money printing that resumed without abandon in March 2020. And so far, we have not even begun tinkering around the edges of the mountain of money printing that still continues to this very day. Fed is still printing money. I'm not seeing they've stopped. There's even been no tightening so far. In fact, I'm pretty sure that today's Fed balance sheet of 9 trillion will be higher a couple of years from now than where it stands today. In fact, we will probably see the Fed and other central banks' balance sheets double once more to at least, the Fed on $20 trillion. Fed balance sheet, so much for taper talk. And thus, what we have been expecting is likely to become manifest, in that high inflation is likely to persist for the whole of this decade, which means a lot of persistent pain in the West. And if there's pain in the West, that will translate into inflation nightmare for a developing world. There's going to be riot. There's going to be revolutions, rioting. They're not going to be able to afford to feed themselves, because it's not going to get any better. It's going to get worse year on year. compounding. Already we can see signs of it. You can see, Sri Lanka's teetering on the brink of revolution because they've gone bust. They can't cover the food and energy costs, and that's just the tip of the iceberg. The whole country's out there. That's even without factoring in the megatrend of the climate change megatrend. The developing world is going to suffer a lot. UK housing market analysis. This video is part of a series based on my extensive analysis that concludes in a detailed 3-year trend forecast for UK house prices that was first made available to patrons who support my work. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $4 per month. And my UK housing market analysis will soon be followed by my even more extensive analysis of the US housing market that also concludes in a detailed 3-year trend forecast, which is at a time of maximum price uncertainty. Even the Fed does not know from one meeting to the next what they're doing. Barely days before the Fed hike rates by 0.75%, the chairman Jerome Powell was saying that 0.75% hike was off the table, which illustrates the degree of uncertainty out there. And also access to my most recent ongoing analysis geared towards capitalizing on this stock's bear market that I warned to expect last December. Capitalize on by accumulating AI tech stocks at deep deviations from the highs at target buying levels, which again first being made available to patrons who support my work. So do consider becoming a patron. I support my work for just $4 per month, gaining access to over 35 years experience, right from before the 1987 crash straight through to this stock's bear market that will ride the quantum AI megatrend into the future.